Bob Dudley, CEO of BP. Bob, welcome to Bloomberg.
Thanks.
The latest breaking news headline is that we need, according to Khalid Al-Fali, a cut of 1 million barrels of oil per day. Do you think a cut of 1 million barrels per day, Bob, would stop the drop in the price?
Well, I think he's already said, he also said from Saudi Aramco's perspective that their customers have asked for 500,000 barrel reduction in December. Yeah. So Saudi Aramco will do that anyway. So I think that's a perception of 1 million down now. They do see inventories building. That's a discussion. I don't think any decision has been made on that, and OPEC will meet December 6th, and you'll hear.
Are you shocked by the speed with which this market has repriced on the downside?
Well, we can see the volatility, the potential for volatility. I mean, OPEC has reduced production since June, and quite frankly, we probably would have been over $100 a barrel right now. The uncertainty is, of course, the big uncertainty. There's several, but the big one was Iran sanctions. Had there been no exemptions given, I think we would have seen a higher oil price today, much higher, and now since that's happened, it was uncertain, it's dropped back down, and in a way, OPEC is responding like a market, saying they had been oversupplying oil to get ready for that. It didn't quite happen, so the prices come down, now they're adjusting. I think it's as simple as that.
Let's see where that goes. Ed Morse was with me last week, and he said those waivers will be reviewed, and we might be underpricing the impact of Iran into 2019. Do you look at it that way, or are you on the dove side?
It's quite possible. The market has dropped so fast, it's sort of overshot, I think, in both directions a little bit now. So it overshot up, now it's shot back down, and I think this announcement of at least Saudi Arabia reducing probably will firm the price at least, and then we'll see what happens.
Do you think we get a floor of $70?
Well, we're planning BP on, really 50 to 65 long term. Yeah. But the market does look firm right now. Even though projections of global growth and demand of 1.3 billion barrels a day, which is below the 1.5 plus people were thinking, is certainly there. I think global economic growth is starting to decelerate a little bit, and so the market to us looks firm in 2019. You have big uncertainties, Venezuelan production, Libyan production, and you have what could be faster production out of the Permian Basin in the U.S., so there's factors that go either way.
Is shale the biggest threat in 2019? The trajectory of shale is really quite stupendous. Is that the biggest threat versus the global demand that you say isn't so challenged?
Well, I think in the long term it's always going to be supply and demand, and OPEC has said, and they just said in there, where they'd like to keep the price within a certain corridor. I think of it as a fairway that's good for producers and consumers. Yeah. The bottlenecking in the Permian has been quite something, but it'll respond very quickly to the market, and there have been avenues and pipelines and other things will move around that. So it will be, I think, an increased production coming from the United States for several years, at least.
We were trying to come up with a phrase. Will Kennedy is one of our editors here, our global editors, and he said, we're in a zero-sum game for oil. OPEC creates the floor, that gives shale in the United States, well, hey, we're away, we've got a lovely floor, we can keep on going. Is it a zero-sum game? That's the danger for OPEC, isn't it?
Well, I think it's, they look at it as that's their role in the world, is to try to create a corridor that continues economic growth going, and not letting it fly up and down. So I think they talk about that as a mission. And yes, that has enabled the shales in the U.S. to play within that corridor, which is very economic. So in the longer term, U.S. production will continue to rise. I think if you think out longer term beyond that, and certainly OPEC does, it's a question mark whether the shales can keep going up. I don't know.
Can we circle back to the big deal that you're doing with BHP Billiton's assets? You've said that you're paying cash for those. The question now in this market, which is slightly more sensitive to price and a big drawdown in price, can the balance sheet take that? You're still absolutely confident the balance sheet can take it? I'm paying cash.
Yes, I'm absolutely confident in that. We had an option whether we issue shares or not. The last quarter was a really good quarter for us, built up some cash. So now we can confidently do that. We will follow it with some divestments as well. So I'm very confident about that.
Very briefly, how are the $5 to $6 billion of investments in the U.S. going? Briefly.
$5 to $6 billion in the U.S. that we're making now, or or the divestments. So the divestments could primarily come from the U.S., but not necessarily. We have a big global portfolio as a company, so we've thought about high grading it. We've got a lot of great natural gas assets there, and divesting some of those after the sale, but we are not going to be held to a time and a date. It's not a fire sale. We've got assets around the world, so I'm confident we will do that. We've said that over 18 months or so. That should happen.